That's correct, Kelly. And honestly, the reason why is just because of the way that investors have been reacting to earnings. We came into this quarter knowing that there were going to be all kinds of headwinds. But the fact of the matter is that a lot of this has been priced in. And what we've seen more often than not is we know earnings are not going to be great. And so when they're better than expected, the company ends up trading higher. So I think at the minimum, Cisco is a hold here. Yes, I know there's all kind of headwinds. It normally does trade lower after earnings in any case. It has about a $2.50 expected move, which would just bring you down into key support. If they do happen to say something that's slightly better than expected, I would look to trade this up into overhead resistance around the $50 price point.
Danielle, quick follow-up question, completely out of nowhere, except that we're about to talk about it next block. What do you do with Apple here, just staying on the tech theme?
Kelly, you ride it to new highs. I know that it's crazy. I know that, this move has been absolutely insane. I mean, I cannot look at this stock and say to short it in any way, shape, or form. It's one of the strongest stocks in the market. I know that the rally doesn't really make sense because normally you're not going to see a stock trade in this direction for so long. But when a stock is 5% off of all-time highs like this, it just creates a magnet.
Wow. I mean, that chart is crazy to look at. Just a straight, perfect upward line. All right, I just had to ask you. By the way, back on the Cisco front, Cisco CEO Chuck Robbins will be on Squawk on the Street for an exclusive interview 9 a.m. Eastern tomorrow to discuss their results. You definitely don't want to miss it. So let's leave tech, turn to retail. Frank, thank you. And we'll bring in our Courtney Reagan to talk about BJ's Wholesale. They've got their results before the bell tomorrow. They've been outpacing the major averages. They're up 2.5% this year. They had better than expected results last quarter. Courtney, what will you be watching?
Yeah, Kelly, so just as a reminder, BJ's Wholesale is a competitor of Costco. It's one of those membership warehouse clubs. You can buy things in bulk for lower prices. They also have gasoline. So this is one of these potential inflation plays for investors because many shoppers turn to them to buy their gasoline and then do that one-stop shopping, go inside and buy their food in bulk. So we're going to be really curious about the traffic numbers and if consumers are buying more bulk items than typical to save that money on that per unit cost. Comparable sales expected to grow 5%. I would put this in a possible winter camp for this sort of retail bifurcation that we're seeing. And lastly, remember, you pay a membership to belong, right? So you want to make it worth your while. Last quarter, the CEO was really happy with what's going on with membership fees and the retention.
And Danielle, it sounds like you kind of would back that up from the sort of trading point of view.
Yes, definitely. I agree with Courtney. I love the technical chart pattern here, and the stock has about a $6 expected move on earnings, which would really bring you up to a new high on the year. So when you're looking at the overall technicals and then you add in with that all of the different macro factors that are going on right now, I completely agree that shoppers are looking for more bargains. Consumer staples is a high area of focus for me. I'm definitely more heavily invested in XLP right now, given the current circumstances. And I like this stock to new highs. If they do happen to note any kind of disappointment, then I think it would be a buy on the dip.
All right. That's about as strong as endorsement as we can get these days. So let's turn to Kohl's, which is much more of a battleground stock. Before the bell tomorrow, with shares down more than 30% this year, but up big in the past month, they did report a massive miss in their first quarter, cut their profit outlook. Courtney, what are we looking for here?
Yeah, Kelly, I am a little concerned about Kohl's going into this print. Look, they serve a consumer that's a little bit more under pressure, a lower or middle income consumer, potentially the same consumer that shops at TJX. I believe there's a lot of overlap there, and there was some disappointment in some of those sales trends today, to say the least, and the forecast going forward. I'm worried that the traffic that is being attracted by the Sephora partnership and the Amazon partnership won't be enough to offset the traffic declines from those that would go to Kohl's to buy apparel, because we know that's been an area that people haven't been shopping. I'm concerned about Pacer.ai's traffic report. They say that Kohl's traffic in store is down about 12.5% from pre-pandemic levels. So I think the company is going to have to give us a lot of details on what's going on in the quarter, but I think there's some points for concern here, even though the stock is already very depressed.
Yeah, Danielle, what makes you, I don't know if you would take the other side of it, but what do you think is playing out in the tea leaves here?
So here's the thing, Kelly, is I completely agree with Courtney. Those are all issues. And what we've seen in the other retailers, especially Target and Walmart, they've noted that their consumers are heading more towards their grocery products. And of course, Kohl's doesn't have that. I think that the Kohl's executives have been doing a really good job trying to get people in store. And I think that that's the issue right now, in addition to the fact that consumers aren't spending money as much on apparel and home goods. But the reason why I actually like this one for a little bit more upside is just because we know the news is bad. We know that it's not looking good. They've already had a bad earnings report last quarter. They've already pre-announced additional negative news over the course of the last quarter. But we've seen that low hold. The stock has continued trading higher, and it has about 10% high short interest. So with stocks like this, what can often happen is they may report earnings, and those earnings were expectedly bad, and that ends up resulting in short sellers having to cover. So ironically, I do like this stock because of the way that earnings has been playing out this quarter. And I think you could at least trade it to June highs, but it's not because I think the business is doing phenomenally.
All right. That's what Shay said. We love it. Feel ready for all these reports. Thank you both very much, Danielle Shay and Courtney Reagan, wrapping out earnings exchange.